Howdy, folks, and welcome to yet another edition of Smarter Money Matters. It really does, with your host, Jeff Camarda, the Wealth Doctor, joined by our super CFPs, Lou and Anna. And we're continuing with our theme of winning with Camarda. And but before we get into the magic of Camarda's Total Wealth Care, I wanted to remind you all, maybe for the first time, that we have been publishing hundreds really, of short videos on Facebook and YouTube and Instagram and TikTok and LinkedIn, I think, maybe some others that I'm too old to know about, that we call Smarter Money Minutes, exponential expertise in 60 seconds usually or less. So you should take a look at these. It's really, really interesting, concentrated bits of wealth. And share it, follow it, if you like it. The easiest way to get there, you'll get QR codes and a bunch of stuff and emails, and these guys will be talking to you about it. But also, by the time you see this, if you just go to thewealthdoctor.info, thewealthdoctor.info, that will bring you to a page with all of the different media, YouTube or Facebook or Instagram, whatever your preference is, with instructions on how to find this vast and growing library. We've been publishing one a day since January, and we're about to go to two a day, and I've really become very passionate about this, and I think you'll find it enormously interesting and beneficial. So, and it's kind of just the tiny part of what we call total wealth care. And so I guess before, I blather on more, Lou, tell me what total wealth care means to you.
Well, it means that we're covering not just one area like investments or portfolio management, but all the different areas that makes up someone's financial plan. So there's really 6 different areas under the CFP guidelines that fiduciary financial planners should cover, and those include, and you may need to correct me if I get stuck. Retirement, insurance, wealth planning is one of them for sure. Estate planning, asset protection, and taxes.
I think you got them all. And that really, actually, what you recited is a basic curriculum, which hasn't changed since I did the CFP in 1990. The core, the beginnings of building a wealth expertise foundation. And Anna at Camarda have really taken that, as Austin Powers would say, a notch higher, or notch down, whatever. Anyway, so tell us, what does total wealth care mean to you here at Camarda?
Yeah, so I think, the big difference that at a firm like us at Camarda, right, compared to prior experience I've had in the industry, is we have the experts in-house, right? So if we're talking with a client about tax, we can go to our team at TaxMaster, and they are looped in, they're aware if it's a mutual client, and we can come together and make sure that all of the planning works together. So it's very seamless, and it's all, for our clients, it's in-house.
Yeah, and I kind of like to put it as, for about the same price, often less really, that you would pay for other advisors, though it's kind of difficult to unbundle and actually see all the costs at many, actually most of our competition. It's buried deep in the disclosure they give you. We're completely upfront and very transparent. But for about the same money or less money as others charge just for portfolio advice, and in many cases we don't think the portfolio advice really is that good, we also are delivering ongoing expertise according to a specific scheduled financial planning calendar that you all have, you practice with on a regular basis. We're giving you ongoing tax reduction strategy, asset protection from lawsuit planning, asset protection for kids' divorces planning, in a deep dive estate and trust planning, either helping you craft an optimal estate plan for your family, or reviewing estate plans that you've done before, getting a free attorney review and helping you to improve those, and often the improvement potential is vast. Ongoing full service financial planning in the domains that Lou highlighted a moment ago, advice on business and real estate, very detailed retirement, cash flow, income planning, insurance and risk management planning, and we even do tax returns and legal documents preparation through our wholly owned affiliate Taxmaster for those clients that want us to. So that really, delivers, not only are all of these services available in-house, which is awfully convenient, but more importantly, we have the knowledge. I'm constantly teaching these guys as a PhD and the other stuff, that the knowledge I've accumulated over nearly half a century, to be able to generate what I call wealth synergy by understanding all of the different domains: estate planning, taxes, and and insurance, and how what your portfolio should do to fund your retirement, with the legacy you want to leave to kids. Looking at all these pieces, you can create a much more effective plan than the piecemeal approach that most people unfortunately have to kind of trudge through, where the CPA says this and the advisor says that, the insurance agent maybe says this, your tax guy does this without talking to the investment guy. It really can be quite an inefficient mess. And I can tell you from working on a couple of big cases just lately, where the investment advisor, or the broker in this case, and even the returns weren't that good, but regardless, the trading that they're doing is oblivious, to the tax impact on the family. And the case I was looking at yesterday, the broker, was generating $250,000 a year in dividends, taxable dividends that the clients don't need, right? So they're producing taxation and a drain on wealth for no good reason, while at the same time trading and taking big losses in the portfolio. The tax return I looked at, they sold stuff that the client had paid $1 million for like $800,000, losing, actually more than that, I think they sold it for $750,000, losing $250,000 that year. But because of the way the tax law is written, they didn't get any tax break for that. There was no offset. The $250,000 in taxable income and the $250,000 of losses didn't wash, so they paid tax on the $250,000 of income and got no benefit for the losses, which to me is crazy, right? And I think probably sounds crazy to you guys. But by understanding how all this stuff fits together, we think we can drive your wealth bus at speeds that were probably incomprehensible to you before. So that really is what we feel is the miracle of total wealth care. And I feel really fortunate, to be able to share this with you and practice it for you, and to help teach and mentor these guys to higher and higher levels of wealth expertise and results for you that I just don't think are typically feasible at other advisors. So that's probably enough on that. As usual, I've drooled on far too long. Any parting comments, Lou or Rana?
I just want to point out a couple of things that you mentioned in terms of like dividends. Things like dividends. Usually, clients, when you talk to them and they're not really familiar with the concept of dividends, they think dividends are always good for you. Same thing with things like Roth conversions. They think they're always good for you. Do a Roth conversion; it's great for you. You have to look at all these different areas, all these different pieces of your financial plan, to make sure that actually is in your best interest. You can't just blindly do it, because like Jeff was just pointing out, it can hurt you in the long run. It can hurt your taxes.
And that's really a great point. These folks I was talking to yesterday with $250,000 in dividends, they said, well, isn't that good? Well, look at it this way, okay? If you want to grow your portfolio, there are two things, basic kinds of stocks. Value stocks, income stocks, and growth stocks. So say that we have a company that's making 10% a year, right? And if it's $100 a share and it makes 10% a year and it pays all the profits out, you get that 10% or $10 dividend every year and you pay tax on it. Say company B, making the same profits, they reinvest that 10% into growing the company. So at the end of that year, instead of paying it to Anna, now the stock is worth 110. And the next year another 10%. So at the end of 10 years, it's still the same growth, roughly from $100 to $1,000. The difference is the dividend, the dividend paying company, you pay tax all along the way. So if that was Anna, she's got less than $1,000 because she paid tax on that 10% every year. Lou over here bought a growth stock, who's got $1,000 worth of value that hasn't been diluted, by the government's greedy little fingers.
That's a good point.
Yeah. And the other thing is, with Roth, guys, please watch this Minute Wealth stuff, because I really drilled down on a lot of these concepts, in 60 seconds or less. Is, a lot of Roth conversions are kind of pointing to you, well, if we do this, 10% a year, in 10 years it's done, without looking what happens each year. You know, in some years it makes a lot of sense to do a Roth conversion if you can do it cheap or no tax cost. Other years you're clobbering yourself. You're giving away a lot of wealth, you know, needlessly that you never get back again. Those are great points. Anna, do you have anything you'd like to wrap up with on total wealth gain?
Yeah, I mean, I think I'll kind of piggyback on what Lou said. You know, every client's situation is different, right? Even if maybe they're in the same phase of life, they might have different family structure, they might have different goals, things like that. And so when we use this approach, everything is personalized for each client, right? Everyone's not just getting the same, you know, portfolio or the same advice. It's all customized, like you're talking about.
And I tell you, the complexity is mind-numbing, you know, for many advisors and many clients. And you know, we've really paid the price to acquire the knowledge to work out the complexity to come out, we think, with what are optimal custom plans that really make a big difference in your situation. So that's probably enough for now. Hopefully you've enjoyed this. Pass it on to others that you think might benefit just from understanding the concept, if you like. And please go to thewealthdoctor.info to go ahead and subscribe, basically, to follow and share these really valuable little bits that I'm recording. One comes out every day, and I think you'll find it very interesting. Anyway, thanks for watching. Until next time, Smarter Money Matters. It really does. See you, Lou. See you, Anna. See y'all. Bye-bye.